Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, August 21st, 2019. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. Currently this week, we are trading in a very narrow range. You have Monday with a range that was up, Tuesday was down, Wednesday currently pre-market is up, but really we've gone nowhere throughout the week. We've stayed in a very narrow range, and if we quantify this with a 3-day narrow range or a 3-day range basis here by dropping this down to 3 days, you'll notice how this indicator here shows that things are super compressed. So down here at the bottom here, you're seeing very compressed action. It's only 39.75 points of total range. It's been averaging 102 points on a 3-day range basis. That is just shy of 35% of normal. And again, that's a compression phase right here, which could be building energy for the next breakout move. We do have 2-day highs that are exactly the same. The previous 2-day highs are one and the same right there. And that could lead to some sort of break and continuation at some point, which could take out these recent highs and push price into the 29.50 to 29.60s. Again, as I've mentioned before, any test in the 29.60 could be a big opportunity to fade for bears until proven otherwise. Once price is able to reestablish acceptance above that zone, there could be a continuation higher toward the 30.40 to 30.50 zone, but overall right now 29.60 remains a very important area of resistance, and until proven otherwise, any push into that area could be seen as a selling opportunity back down. So right now we do have a narrow range. We do have crude oil inventories coming up later today, and really not much more than that. Existing home sales today, but really later on Friday morning, we have the Fed Chair Powell speaking, and that's going to be very important for the market and likely for the next key directional move. If we take a look at the NQ right now, you'll see the NQ is trading very similarly to the ES. Very narrow 3-day range as well. Down here trading just 136 points of range when it's been averaging nearly 320 on a 3-day range basis. That's 38% of normal. Again, you have this range right here, which is very normal. Up Monday, down Tuesday, and so far up Wednesday. Again, 2-day highs are very near each other, so we could begin to see some sort of breakout and expansion that could take us into the 7,800 to 7,850 zone. I mentioned before, if we take out 7,800 in that recent pivot high, it could still be an opportunity to fade for bears back toward the 200-day average and recent support at 7,400. So it's going to take a push through 7,850 and acceptance beyond that zone to start pushing this thing back to highs, which can certainly happen. But again, until proven otherwise, this area right here remains resistance. So any push into 7,800 to 7,850 could still be an opportunity for bears to defend. Now taking a look at crude oil, again, we do have crude oil inventories today. API crude oil stock yesterday afternoon came in at a build of 3.5 million. We'll see what that means for crude oil here today. You'll see right now that crude has had higher highs and higher lows day over the last week of trading. This one has been pushing higher and is just shy of testing the 57 level. Between 57 and 58 has been heavy resistance this month. It was offered first trading day of August here tremendously. The retest in that area after the bounce was also offered quickly. So again, this is a zone just like the broader market indexes in the NQ and the ES. Testing from below could offer an opportunity for bears to defend. Now this one is trading within a larger key range here. We have this key range, high, low, and midpoint, and these are the boundaries that are going to give us the next extensions once expansion occurs. And price has been mostly traded in the middle portion of that range building energy. It did get down here and take out the low and bounce back to the midpoint, as we suggested would occur once we did have that rejection on that low. But we're still kind of chopping around the midpoint without a whole lot of direction. Again, the major area of support is at 50-50 level, and if that level is violated, that's when we'll see the next support level down, which would be 42.5. We'll see if price can continue to hold that zone. Again, we're dealing with an upper trend line here across these highs, and the 57 to 58 zone remains significant resistance. So we'll see how price reacts should a test in that zone occur. Lastly, looking at gold here, you'll see gold futures has been trending higher, but is now in a pullback zone inside the Pima trigger zone. Again, this market has been very bullish overall, and at the moment has stayed fairly flat while testing the Pima trigger zone. That tends to be an energy building phase. This is offering an opportunity for one more explosive move higher. Again, I mentioned before that 1525 is significant resistance as it was prior support before. It's been 6 years since we've tested this zone, so not expecting for a major explosion through that area, but at the same time, the trend is what it is. It is trending higher. It has exploded higher out of this compression phase to begin the month of August, and now it's building additional energy and responding to the Pima trigger zone. So until proving otherwise, we still have a likely another squeeze coming, and that could take us into the 1565 zone. Failure to hold 1500 here, anywhere in the 1490, 1480 to 1500 could still provide a bounce, even as deep as 1460. But a failure to hold 1460 would then suggest a return as deep as 1375. So 1460 remains the major pivot here to watch for a change of bias in gold. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.